Welcome back to Conversations with Kyle. Kyle is a CPA, and today we're talking about vacation homes. Kyle, it seems to me that a lot more people during this pandemic are looking for space, either in their home or getting a second residence or like a vacation rental property where part of the time they can spend time there, and part of the time they can rent it out and make some additional income.
I think everyone's lifestyles changed quite a bit during the pandemic, and like you said, people are looking for other options, whether it's working, start snowbirding, at an earlier age than typical than before, or just having more space. But where people ask me is just usually the tax implications, which they can be, diverse in terms of, what you're looking for, how you're using the property or where it is. So
let's start. What are the right questions you should be asking yourselves up front, like about buying a vacation rental property where it's like kind of like mixed use, where you're going to use some of it and you're going to also try to rent it out?
Yeah, I think just establishing, the use of the property and what your goals are. Is it going to be a personal use property? Is it an income generator, or is it somewhere in between where you just want to generate income while you're not using it? And I think once you kind of answer those questions, it's much easier to determine what the tax impact is and what planning you can do now to mitigate any tax impact, either when you're selling the property or as you're operating the property.
Yeah, and I would think like some of these, when you're buying vacation rentals, typically it's either in a HOA type development or a condo complex, and there's some rules where you can't even do short-term rentals in some of these. So like you have to really understand the community that you're buying in and what things that they allow or they don't allow. I know in San Diego recently, the city's thinking about limiting Airbnbs in the actual city zip codes. And also, what if like there's damage or theft, or how are you going to manage that type of space? Have you had any risk or had any experience with that? Like in terms of your clients, in terms of they have a vacation rental home and they have to deal with the upkeep and
I think a lot of people just find out what big of a hassle it is, and whether they want to pay a property manager to take 20% off the top. I think, in the grand scheme of things, if you're busy with your busy life, I think paying the 20% property manager is well worth it, because you don't want to be dealing with changing out locks and people losing the key or the sink not working, just those simple things. So I always just say, make sure it fits your lifestyle, and you're not getting into something too far over your head that's going to create problems for you, just time wise mostly.
And that's a good point, because most of the individuals trying to look for a vacation rental type property, they're working professionals and they have, families and stuff like that. There's also some probably like liability risk, right, that they should probably kind of address or consider via like either, I don't know, like an umbrella policy or like creating separate LLCs or anything like that. Have you discussed any of those options?
Yeah, especially the more you're using it as either a short-term rental or a long-term rental, definitely the liability increases. So, I usually recommend putting each property into its own LLC, and obviously having insurance coverage and making sure if somebody slips and falls and hits their head, they can't go after your other assets. They can only go to the assets to the extent of the LLC. But those are more legal questions than tax, but definitely comes up, when people are looking for rental properties, vacation rental.
And so, if you're using it for dual purposes, like I guess this is something important to kind of illustrate, is that the deductibility of the rental expenses is like a proration of days rented versus personal use, or how does that work?
Yeah, and so if you use it greater than 14 days during the year, which I think most people at least intend to spend 14 days or more at a vacation property, then the deductibility becomes quite a bit less. You can only deduct to the extent of income, so you can't take a loss in that current year. If you're using it 14 days or less, then it becomes, more of a rental classification. And so you can take, the full depreciation and, more of the expenses associated with the property, give you more of a tax benefit.
Yeah.
So if you're well above that, like I said, I think your lifestyle considerations are more than the tax considerations in that sense. So if you're going to be spending, 6 weeks a year there, just keep track of the days that you spend there. And then obviously you want to, any utilities or cleaning fees, HOA fees, mortgage interest, real estate taxes, all of that is tax deductible against the income that you generate from the property.
Yeah, no, makes
And
makes
so,
sense. And I guess if there's some personal use, there's probably some proration of that for personal use time and total days rented. And
right. Then you if you're over 14 days, you take a percentage of the expenses. So if 20% of the time it's being personal use, 80% is rental, you get 80% of the deductions. So.
And think about it, if you're busy, successful in your own career and you don't want to have the headaches, it's probably sometimes easier just to go rent, or stay at a hotel or something so that you can, not have the burden of a rental property. But
Let somebody else run the business and the tax impact. So,
yeah, exactly.
and then, depending on where the property is located, the state and local, or, internet, if you have a place in Mexico or internationally, there's very vastly different tax implications based on where you're located. So,
so if you have questions about vacation properties or anything like that, and having some personal use and renting it out, reach out to Kyle, because Kyle's probably way better and more knowledgeable than anybody I know within this specific space. And if you have questions or comments, please leave it below. And thank you for watching.
Thanks, Amar. Thanks for everybody that's listening. Appreciate it.
Bye.
Bye.